Hello, welcome to the weekly technical analysis review here at xm.com. I'm Rahbearjan, currency analyst, and today is Monday, July the 16th, 2018. The pairs we're going to be looking at for this week are the dollar yen, the pound yen, and the Kiwi dollar. Starting with dollar yen, we can see the near-term bias is strongly bullish. RSI has flattened though above the 70 overbought area, while if you look at the stochastic oscillators, the percentage D line is crossing above the percentage D line, signaling a possible downside reversal, though prices so far today remain in positive territory. If we do see further gains, the next major resistance to watch out for is the area between 113.40 and 113.50. We can see that area was a strong congestion area back in late 2017. A break above that region would lead the way towards the top from late 2017 of 114.73, and it would reinforce the medium-term bullish outlook. In fact, we did just get a bullish crossover of the 50-day moving average with the 200-day one earlier in the month. To the downside, though, we do see prices heading back down again. Immediate support should come from around the 112 area, and further down we have potential supports around 111.30 and 110.75 before prices would to make their way towards the moving averages. So the moving averages are at the moment forming a strong support region between 110 and 110.20. A breach of that support would shift the bullish outlook back to more neutral one. Our next pair is the pound yen. We can see that prices are trying to break above that long-term ascending trend line. We can see that trend line that started back in April 2017. It had been acting as support in the past, but since prices dropped below it, it has in fact been acting as a resistance. Prices haven't quite managed to break above that line, but if they do, there's likely to be more resistance at the 200-day moving average around 149.50, and then not too far above that we have the 61.8% Fibonacci retracement of the downline from 113.84 to 143.80. So that's around 149.75. A break above the 61.8% Fibonacci would help further strengthen the upside momentum and possibly signal the start of a new bullish phase, and it would also open the way to the April top of 153.84. If you look at RSI, it hasn't quite broken into overbought territory, so there is clearly room for further gains in the near term. But if we were to see a downside reversal, support should come at the 50% Fibonacci around 148.50. A break below that level would open the way towards the 38.2% Fibonacci around 147.25, and not too far below that we have the 50-day moving average around 146.80. So a drop below the 50-day moving average would shift the focus back to the downside and potentially lead prices towards that 8-month low 143.18 we saw back at the end of May. And our final pair for today is the Kiwi dollar. We can see the near-term bias is rather neutral. RSI is flat below the 50 neutral level. But if you look at the MACD, it did manage to cross above the red signal line. But clearly it is lacking direction in the near term, with immediate resistance coming from the 20-day moving average around the 0.68 handle. If prices were to break above the 20-day moving average, we should then see strong resistance coming around 0.6850. We can see that level has acted as both support and resistance in the past, and a break above that resistance level could then see prices aiming for the 50-day moving average around the 0.69 handle. If prices were to manage to break above that, we would then see the near-term bias turning bullish, and potentially opening the way towards that strong resistance we saw back in early June around 0.7050. However, if we were to see prices heading back down again, support should come at that 2-year low of 0.6686 we saw back in earlier this month, and further down, the next major support should come around 0.6580. That's it from me. Thank you very much for watching, and have a great day.